Welcome to Business Line's State of the Economy podcast, where you'll find insight, analysis, and the story behind the numbers.
Welcome to the State of the Economy podcast. NCDEX is India's one of top commodity exchanges right from the time the center allowed futures trading. It has begun offering various derivative products too to benefit participants. To talk about NCDEX's progress and its rational thinking on ensuring better return to farmers, we have with us Mr. Arun, the MD and CEO of the exchange. Straight away, I want to ask, how is NCDEX faring currently? Barring agri commodities at the center band, are we witnessing an increased interest in futures trade?
So there are two parts to this. One is the commodities that are banned. There is a demand for those commodities by a lot of stakeholders. As far as the current set of commodities is concerned, since probably you're aware that the spices are doing well internationally in terms of their prices. So they are doing very well on the exchange also, whether it is turmeric, whether it is cumin, whether it is coriander, all of them are doing pretty well. Now, the second part of it is guar, which is our staple long time bet. And that is also doing well because next 2-3 months will be the season for guar. So guar gum and guar seed both are doing pretty well. So as far as commodities which are there on the exchange, as compared to the last year, this year we are seeing increasing interest as well as increasing volumes and increasing participation. Now, things like turmeric, we are fortunate that some of the corporates who are not trading on the exchange on spices, they are coming in. So that's a new interest because of the prices across the board. So that is a good sign. And hopefully, we should be in a position to launch some new products, which will also bring in some stickiness into the exchange clientele.
Sir, is there any increased interest in trading by corporate houses? You were talking about turmeric. Also, Jeera also has done really pretty well this year.
Yeah.
If you see, the prices have more than doubled.
I wouldn't name them, but there were some corporates who were dealing only in, say, pulses or only in edible oils. Now, some of those are coming into spices. So that's a positive sign as far as exchange is concerned. That is a positive sign as far as derivatives are concerned. So from exchange perspective, it is good for us because the same set of members or corporates whose commodities have gone, but they are still trading on the exchange. So that is a positive sign. As far as the derivatives market per se is concerned, it's probably a good example of corporates or buyers having faith in the derivatives. Therefore, though they don't have the key commodities, they are still active on some other new commodities. So that way we are happy.
Sir, 2 months ago in Hyderabad, you had said that options trade can be a good alternative to providing minimum support prices. Can you kindly explain this, sir?
I will not say alternative, but I will say it will be a good complementary instrument or mechanism for MSP. Now, if you look at MSP, there are 2 or 3 things happening. One, year on year, if you look at the budget earmarked for MSP, it is going up only. And with about 21 odd commodities and increasing demand, even for onions now, there is a demand for MSP. Now, government will not be in a position to provide MSP to all the commodities all the time. Government doesn't have the budgetary resources. Therefore, there is a need to find alternative or there is a need to find some complementarity to MSP. Now, what could be the complementarity? And can we get in some other resources? Can we get a private sector in? Can we get some other means? So what we are saying is options is one such complementary tool which can help government in finding the end result which MSP is giving. Now, what does MSP give? MSP gives a guarantee of a particular threshold to farmers that we will procure at this particular price. Say, suppose that is wheat, then it is 2,400 rupees per quintal or whatever. Now, what is farmer looking at? Farmer is looking at when he or she harvests the crop, there should be an assured return. Now, what is options doing? Options is equivalent of some way it is price insurance. Now, suppose you buy a car. What you buy a car and you buy an insurance with the car. Through the year, if nothing happens to your car, the premium which you have paid, it is waste. But in case if something goes wrong, the insurance companies takes care of the repair or whatever damages those costs. Now, an option is some way like insurance, but it is much better in the sense that, so I'll explain what the options do. So just like you buy insurance, same way you buy options at the time of sowing your whatever. Suppose you are sowing soybean in the month of May or June in Madhya Pradesh, Andhra or Maharashtra. You are sowing soybean in the month of May or June. At that point of time, the future markets gives you a price that in October, when you harvest, it is suppose 5,000 rupees. right? That we call a strike price. Now that for that 5,000 price, you buy options at say around 4 or 5%. So you pay 250 rupees upfront to exchange to be given to the underwriter, whosoever is underwriting that risk. Now what happens in the month of October? There could be two possible scenarios. One, the strike price is 5,000 and the rate of soybean possibly goes down to say 4,000 rupees. Now, in normal course, the farmer would have lost about 1,000 rupees per quintal. Since he has bought options, he can go to the exchange and get that 5,000 rupee rate, and the underwriter will pay him that 5,000 rupees. So it is guaranteed. His downside is covered. He doesn't have to worry about whether I have to sell it at 4,000 or 4,500 or whatever. He can sell it at 5,000 rupees on exchange platform. So whatever losses he could have incurred in the free trade, he is covered for that. He is getting his guaranteed 5,000 rupees price. Now, the second scenario could be if the soybean prices are at 6,000 rupees. The beauty of this, and which you don't get in your automobile insurance, is if it goes to 6,000, the farmer is free to go to the market and sell it in the market. He doesn't need to come to exchange platform and sell it at 5,000. He can go and sell it in the market at 6,000 rupees. Now, what he loses is only the 250 which he would have paid. So instead of 5,000 strike price, he gets 5,750. Instead of 6,000, he gets 5,750 also. But then his downside is fully covered, and when there is upside, he gets that upside also. So that is the beauty. Now, who are the people who are guaranteeing this? These are financial hedgers. This could be corporates who are interested in buying goods and ensuring that there is a supply for him. So this way, the private sector is coming in supporting the government. Now, this is something which possibly the government should be looking at for the simple reason that government's own burden of MSP or subsidizing, crops year on year and increasing number of crops goes down. And private sector takes this as a price insurance, as a risk mitigation exercise for themselves, as also ensuring that their supply chain is in proper shape. And therefore, we feel that this could be a very good complementary tool for the government to implement. And there are two other advantages to this. As I said, the increasing demand for increasing number of commodities, that will go down because the farmers will realize that there is a mechanism available by which they can get into the markets and they can look at this particular tool as an option for themselves. That is one. Second, this whole problem related to supply chain management and ensuring that the processors or the large buyers, they get their assured supply, that also will be taken care of because they will know how many people are buying options and what is the supply chain like and where they can buy and how they can buy. So this will solve a lot of problems. It will also in turn encourage the warehousing and the ENWR bit. So I think it will be a win-win for government as well as corporate sector. And this is something which government should actually implement in true earnest. That's what our hope is.
How can the government go about helping farmers in taking part in options, particularly, when they have reservations of taking it? I mean, when they go to pay this margin, they think that probably they're taking some risk.
Very interesting. So initially, when we launched this particular thing, we did realize that, farmers don't have money and farmers may not be in a position to take buy that options at the initial stage because they may not either have trust or they may not have information. Luckily for us, our regulator, they waived off some of the fees which we pay to them and they made available that particular pool of money to us. So initially what we did was, we can't reach the farmers directly. So what we did was, we reached out to the FPOs and through them the farmers. And we said, this is the scheme available. Let the farmers buy. On an experimental basis, we will waive off that options, whatever they are saying, and let them trade on the platform. So in the initial year, about 41 odd FPOs, they traded on the exchange platform with the subsidy or with the 100% subsidy provided by the regulator out of the regulatory fees. Out of those, and luckily for us, and this is something which is very interesting, out of those 41, next year, 3 FPOs came back and there was no subsidy, there was no money being given by regulator or us to the FPOs. Those FPOs, they said, no, we want to do it on our own. We will trade. So our hope is, the initial first year or second year, possibly the farmers would need that to establish the proof that this is something which works. But second or third year onwards, you may not need any subsidy. So therefore, this burden of MSP, which possibly is 100% right now, next year, even for buying options, if it is 100% this year, next year you can go, in a staggered manner, you can reduce it. Maybe next year you subsidize only to the extent of 67%, third year 33%, and fourth year onwards you don't even subsidize anything. Farmers will understand the benefit and they will buy the options. This is something which we have been talking about. We are in discussion with the financial sector as well as governments on this. And hopefully there should be some buy-in on this.
Sir, how many FPOs are currently showing interest in options trading? And overall, how many FPOs are taking part in NCDEX trading? The other instruments also.
As we speak, I'm not very sure how many FPOs are active in this country. Though the target was 10,000, my information from my FPO team is just about 3 or 3,500 FPOs are active. And out of that, 500 are associated with the exchange platform as we speak. Now, unfortunately, out of those 500, a lot of those were, trading in commodities which are banned now, especially soybean. So whole central India, whether it's Maharashtra or MP or Rajasthan, soybean and pulses are banned. So therefore, they cannot participate. So right now, majorly the FPOs who are participating are in spices, turmeric and others. I don't know exact number because this is the season for turmeric. But maybe in 3 months' time, I will be in a position to know how many FPOs participated actually in the futures program. But we ran it as an experiment only once. And as I said, 40 FPOs had participated. And if you say what was the repeat without the subsidy, out of those 40, 3 came up. Even without subsidy, people are willing to buy it.
Well, are states showing interest in options trading? And if so, how far have they progressed on this front?
So as I mentioned, we have taken it up with NABARD and a couple of states. We are in discussion with Andhra Pradesh as well as Maharashtra. Andhra Pradesh, it is a little slow, but Maharashtra, we are in a process where we are filing the MOU with them now. So they have already earmarked some funds for turmeric for this year. And as we speak, our MOU is being prepared. Maybe next week or so, we'll be signing it with Government of Maharashtra. So that will be the first state who will be subsidizing. We hope that Andhra will do it, but somehow it is slowed down and Maharashtra has taken the lead now. And the second discussion which is going on is with NABARD. In fact, today we got a message from NABARD saying that those FPOs who were benefited, NABARD officials want to speak to them directly. We are arranging that meeting. And let's hope that also works. So NABARD will also be supporting this.
But is NCDEX considering introducing any new commodity or any contract in the near future?
Yes. It is subject to regulatory approvals. We might introduce 2 or 3 new products. The first one is sunflower oil, for which we have already submitted our proposal to the regulator. The next in pipeline is carbon credits. In fact, we should be submitting our proposal either today or early next week. Before this month end, we will submit it to the regulator. So subject to regulatory approvals, we should be launching these 2 very soon.
Well, it's been wonderful talking to you. Thank you very much.
Thank you very much.